If you own a home and are over 60, pause what you're doing for a moment. Because in 5 specific states across the country, thousands of older homeowners are quietly losing more than $4,000 a year right now. And most of them have no clue that it's happening. This isn't a scam. It's not a hoax. It's hidden deep within state property tax rules. And it is completely legal. And here's the part that should make you sit up straight. These agencies are counting on many people not to notice the change. Stay with me for the next few minutes, because by the end of this video, you will know which states are involved, who may be affected, and what steps you can take right now to help protect your home and your money. Starting today, welcome back. I'm really glad you're here. If you follow this channel often, you already know we don't waste your time. We bring you useful updates that are current, verified, and direct, because you deserve the truth about what is happening with your money, your benefits, and your home right now. Today's report is one of the most important stories we have covered this year. We're discussing a quiet financial burden hitting senior homeowners in 2026 through a system that was meant to offer protection in practice for many families everywhere. And the 5 states we're naming today, some of them may absolutely surprise you. So let's dive in now. Here is the heart of what is happening. Every state in America offers something called a property tax exemption, or freeze, intended specifically for older adults who qualify. The concept is simple. Once you reach a certain age, or your income falls below a set level, the government is supposed to shield you from rising property tax costs. For decades, millions of older adults relied on protection. But in 2025 and into 2026, 5 states quietly changed the rules again. They adjusted the income thresholds. They moved application deadlines earlier. They revised renewal requirements too. And they did it with very little public notice. The result is that hundreds of thousands of senior homeowners who were once protected are now paying full property tax rates. And many never realized their exemption had changed until the bill arrived in the mail. For seniors, that gap reaches $4,000 or $5,000. Some are seeing yearly gaps of $7,000 or more apiece. Think about what that means on a fixed Social Security income. That's grocery money. That's prescription money for families. That can mean the difference between staying in the home you've owned for 30, 40, sometimes 50 years, and having to sell it later anyway. Now, let's review the states, and listen closely here today, because even if you don't live in one of these states today, this pattern is still spreading. First is Illinois. Illinois made major changes to its senior homestead exemption rules, beginning with the 2025 tax cycle. Seniors who missed one renewal notice, often sent to old addresses, lost the exemption entirely automatically. Many did not learn until the tax bill arrived. The average loss for affected seniors is about $4,200. Second is Texas. Texas has no state income tax, but it does have some of the highest property taxes in America today overall. The state's over 65 freeze program has been quietly tightened, with new paperwork rules that many longtime homeowners were never told about before. Seniors in counties like Harris, Tarrant, and Dallas are among the hardest hit. Third is New Jersey. New Jersey is one of the most expensive states in which to own a home, and its anchor property tax relief program, though active, saw income limit cuts in 2025 that pushed thousands of middle-income seniors off the list. For many, that meant losing yearly rebates of $3,000 to $5,000 overnight. Fourth is Pennsylvania. Pennsylvania's property tax rent rebate program, long viewed as one of the nation's most generous senior relief programs, was changed slightly. While officials said the changes would help more people, the income limits were adjusted in a way that excluded a large share of seniors who had been receiving those benefits for years. Fifth is Florida. Now this one may surprise many people, because Florida is often seen as the senior-friendly state in America today overall. But here's what many people miss today. Florida's Save Our Homes benefit, which limits annual increases in assessed home values, is now being tested by rising market prices and new county-level assessments that may narrow state protections in ways legal experts are still challenging in court today. I want you to picture a woman briefly. We'll call her Margaret. Margaret is 74 years old. She still lives in the Illinois house she and her late husband bought back in 1987 together. She raised 3 children there over time. She cleared that mortgage completely in 2009. She believed she was secure. She applied for her senior homestead exemption in 2018 and received it with no problems. She assumed it renewed automatically because the county office had told her that when she first applied. But it wasn't renewed. A new administration changed that process. A letter went to an old mailing address from a form she had filed years earlier. Margaret never got that letter. And when her 2025 property tax bill arrived, she owed $4,400 more than the year before on her $900 a month Social Security check each month. She is not alone. There are thousands of women like Margaret in this country today. Seniors who followed the rules, did everything correctly, believed they were protected, and are now facing a financial strain because of a rule change they were never told about beforehand at all. Now here's where this ties directly to your IRS question, and this part matters greatly. When seniors have to pay much higher property taxes without the exemptions they expected, there are two important tax consequences most people never consider in practice today. First, if you itemize deductions on your federal return, those higher property tax payments may be partly deductible, but only up to the SALT cap of $10,000 each year. Many seniors do not realize they can deduct these payments, and the IRS will not call personally to remind them today. Second, for seniors receiving Social Security benefits, a sudden jump in out-of-pocket property tax bills can create stress that leads to other financial choices for some households. Withdrawing more from retirement accounts, for example, can push them into a higher income bracket and trigger tax on as much as 85% of Social Security benefits later overall. That's correct. Losing your property tax exemption could indirectly make more of your Social Security income taxable later overall. This is the chain reaction nobody talks about. And speaking of Social Security, let's look at where things stand now in 2026, because there are updates you need on your radar this year too. The 2026 Cost of Living Adjustment, or COLA, was applied at the start of the year. While any increase helps millions of seniors in high-tax states, that COLA has been largely erased by rising property costs already this year. The average Social Security retirement benefit in 2026 is about $1,800 to $1,900 each month. For seniors in the 5 states named today, property tax spikes can consume 15 to 30% of that monthly income in some cases. The Social Security Administration does not include local property tax burdens in benefit calculations. That gap between what Washington thinks you need and what your state is actually taking from you is the crisis nobody in D.C. is really discussing openly yet today. And I want to be crystal clear here. There is help available, but you have to know where to look and act fast right now too. Several federal and state relief programs exist specifically for senior homeowners facing this same situation today. Here's what matters most. The Low-Income Home Energy Assistance Program, or LIHEAP, has expanded eligibility in several states to help offset household costs for seniors whose budgets have been squeezed by rising property expenses. The USDA's Section 504 Home Repair Program offers grants up to $10,000 and loans up to $40,000 for low-income senior homeowners. And many people who qualify have never applied because they did not know it existed. At the state level, several counties in affected states have emergency senior tax relief funds available. Some offer one-time grants of up to $2,500 for seniors who missed exemption windows because of notification problems. But here's the catch. Most of these programs have application windows, deadlines, and they operate on a first-come, first-served basis. Let's be specific about what changed going into 2026 and what you need to know. Income thresholds were reduced. Several states lowered the maximum income allowed to qualify for senior property tax exemptions. If your income, including Social Security, pension, or investment income, is above the new limit, even by a small amount, you may not qualify anymore. Renewal processes were automated and flawed. Multiple counties moved to digital renewal portals. Seniors who do not use email or who have outdated contact information on file are falling through the cracks. Assessment values rose. Even with protections in place, counties doing new assessments are finding new ways to raise taxable values, which increases bills even for seniors who still have their exemptions. Documentation rules tightened. Several states now require income checks, proof of primary residence, and in some cases, notarized affidavits, requirements that were not there 2 years ago. Okay, enough bad news for now. Let's discuss what you can do right now to protect yourself better today. Step 1. Call your county assessor's office this week. Not next month, this week. Ask them directly. Is my senior homestead exemption or property tax freeze active on my account today? Get the answer in writing whenever possible. Step 2. Ask whether any recent program changes have affected your eligibility at all. Ask what the current income limit is. Ask what paperwork you need to keep your exemption going forward. Step 3. Review your most recent property tax bill line by line. Look for the exemption line. If it is missing or lower than it was 2 years ago, you need to know why. Step 4. Contact your state's Department of Revenue or Department of Aging. Many states have dedicated hotlines specifically for senior tax questions. These are free services. Use these. Fifth step. If you believe your exemption was removed by mistake, you have the right to appeal. Most counties have a formal appeal process. Do not assume you're done. Fight for what you deserve. Now, this part is important, and I need you to hear me. With all this confusion around property tax exemptions, scammers have stepped in online lately too. Some people and companies are cold calling or mailing seniors now, claiming they can restore an exemption for a fee. Some charge $200, $300, even $500 for a service you can handle for free by calling your county office directly. If anyone contacts you claiming to be from a senior tax relief bureau, a property protection agency, or anything official you've never heard of, hang up and block them right away. Delete that email. Throw out that letter. Real help costs absolutely nothing. Your county assessor's office, your state's Department of Revenue, AARP's free tax assistance program. These are legitimate, no-cost resources. Do not let scammers take what the state is already trying to take. Let's step back for a moment here. What is happening in these 5 states is not random. It's a sign of a much bigger issue in America: the slow financial squeeze on older middle-class households everywhere. This is the generation that built the country, paid taxes through their working years, and was promised a retirement built on Social Security, a paid-off home, and fair treatment from the system they knew well. And yet, in 2026, that system is still finding new ways to reach into their pockets. The property tax exemption was supposed to be the firewall, the protection, the promise that at least your home stayed safe. For hundreds of thousands of seniors, that protection is gone, and nobody gave them a warning. That's exactly why videos like this matter. That's why you should share this with every senior homeowner you know today. I'm going to ask you one thing now. Think of one person in your life, a parent, neighbor, friend, or sibling, who is a senior homeowner living on a fixed income every day. Only one person. Share this video with them now. Not later. Now. Because if they're in one of these 5 states, or even in a state watching what these 5 are doing, this information could save them thousands of dollars. This channel exists because of people like you who believe seniors deserve clear information right away. Hit that subscribe button if you haven't already, and tap the bell so you never miss an update. I know this is a lot to absorb today, and I know that for some of you watching now, this is not just a story. This is your life, home, and retirement too. I want you to remember you are not alone here today. Millions of seniors are facing the same issue, and the fact that you're here watching, learning, and staying informed matters. That's how you protect yourself best. That's how you push back too. You have more power than these systems want you to think. Before I let you go, note these on your calendar. In most states, property tax exemption renewal windows open between January and April every year. Several states have hard deadlines of June 30th for the 2026 tax season. If you miss it, you could wait a whole year to reapply and pay full rates during that time. AARP's tax aid program is available through April in most areas, and they can help you find exemptions and credits you may have missed. Don't delay. The calendar is not working in your favor. One last thing. The 5 states we discussed today, Illinois, Texas, New Jersey, Pennsylvania, and Florida, are not the only states following this issue. At least 8 other states introduced similar legislation in 2025 and 2026 already. This is a trend, And if your state is not on this list, it may be next. The time to check your exemption status is before a tax bill surprises you at all. Now is the time. That's everything for today's update. If this video helped you, please give it a like below. It genuinely helps this channel reach more seniors who need this help. Leave a comment below. Tell us your state down below. We read every comment here. And if you have a question about your situation, ask it down there below. You might help someone else who has the same question and does not know it yet. Thank you for being here. Thank you for trusting this channel with your time. Stay informed, stay safe, and we'll see you next time around.